Hey guys, thank you for tuning in to another episode of Ryan Makes Sense, where we talk about personal finance, investing, and chart analysis. Today, I want to talk to you about four stocks that are microcaps that I think are definitely worth looking into and potentially holding for the next 1 to 10 years. Again, this is all based on your own time frame, and all of the information I'm going to share is my opinion. Please do your own research. But these microcap companies that I'm talking about, they do have institutions owning over 10% of the company, which is a great start for the people with money, the people with the pockets, the deep pockets. They kind of already have a head start. These companies also have plenty of cash. They had huge runs back in 2021 where they were able to capitalize and take some money off of the table to reinvest in their own company. These stocks also have little to no debt, and they have earnings per share growth this year. Additionally, there's under 100 million shares available, so the supply and demand is going to look more appetizing as time goes on. Enough about all of these juicy details, but let's look at these four stocks now. So this next one we're looking at is ticker symbol AWRE. This is going to be Aware Software, technology software company. Let's just look at the monthly chart to just kind of see what we're looking at here. I'm a very visual person, but I also do want to look at sales and everything else. So looking at sales, they only make 15 million, which is not a whole lot. They have no debt. They have quite a bit of cash here, it appears. Um, Guidance next year is negatively down. Insiders are purchasing. Institutions own 33% of the company. Shares float is under 100 million. Gross margin 92.5%. That's insane. Looking at this chart, it looks like a huge market cycle is kind of ending. We have this rounding effect. So this looks kind of prime. I'm not a big fan of 15 million in sales, losing a little bit of money here. So that's about 14.7 million in sales with shares available being 12. So this fairly priced is around $1, which is fine. We've seen AMD, we've seen Enphase, we've seen Digital Turbine all go under $1 or less. We've seen Renesola under $1 or less to then rise over 1,000, 10,000%. So price here is not a concern until we start diving in a little more. So let's just go down and look at these insider buys and look at the balance sheet and income statement. Okay, so first thing to call out is that they are current on their financial reporting. 2020, they brought in 11 million. 2021, they brought in 16, almost 17 million. 2022, it looks like they brought in about 16 million. That should be confirmed here in the quarter one earnings, which I'm not sure when they're coming out. It looks like I mean, look at those gross margins. They pay 1 million to earn 16 million almost. So that's pretty good. Again, it looks like gross profit was rising until maybe this year. Maybe that's something to look into. Net income, this is really juicy. Net income is steepingly, it is steepingly decreasing. So from negative 7.6 to negative 5.8, now negative 1.2. That's improvement, if you ask me. No sellers. No sellers. The biggest buys are coming from the director, 364 million at $1.63. Current stock price is $1.75. Darn it. I thought we were going to be able to get a premium there. Um, okay, this looks good. Let's see what the company does. So they're a biometric software products and solutions globally. Biometric software products. Okay, this is good. This is really good. Um, okay, in addition, it offers program management. This is awesome. This is great. This is, in terms of disruption, are they disrupting a security solutions um, industry, maybe. I mean, at these prices, they're a wonderful acquisition target. Let's finish up down here, and then we'll take a look at the website to see if it actually looks kind of cool or if it's looking like it's from the 90s or something. So just going down here, oh, they are decreasing operating expenses. That is smart. Good for them. Okay, let's look at their balance sheet. Okay, they have 29 million in cash. That's more than they make in a year. So cash is slowly going down, and assets are slowly going down as well. It looks like plant property is up, so they're investing more into the business. It looks like their goodwill is up, and intangible assets are up as well. So their total assets is 48 million, and total liabilities is 6.8 million. That is amazing. That's almost like a 8x assets dwarf liabilities 8 times, which is awesome. Almost. I mean, I'm just doing some quick math in my head. Could be a little less or a little more. Full-time employees, 90 down to 81. Okay, number of common shareholders, kind of in the same area. Nobody is selling the stock. It's kind of cool. I just want to see how many shares they own. So the director, John Stafford, owns 5 million shares. Okay. Where's the CEO? Chief Technical Officer, 42,000. Where's the CEO? CEO only owns 250,000, give or take. CFO is buying and owns about 54,000. CEO and president, yep, this is old. So yeah, the director, John Staffords, really believes in this company. Um, that could be an area of a deep dive. Maybe look into his history. What does he know? I don't know. Has he been in the press or anything for positive things? I think that would be good to know. Now we're just taking a peek at the website just to see how it looks. Okay. Um, just doing some quick call outs. Their website up here, they have a SSL. They care about online security. That is great. Let's look at their careers to see if they're hiring or expanding. Just gonna look in a new tab. So it looks like they're in 20 plus countries, 100 commercial leaders, 80 government agencies. One government contract could be huge if they're selected for a large job. Bunch of awards, good for them. Biometric framework, okay. Just going down. This is pretty cool. Careers looks kind of their page looks a little outdated. They have their positions based on buttons instead of like a list. So they're hiring for 3 roles. So this company is really small. Sorry, I keep leaving my bubble. I kind of like it. They have no debt. So the only time this company is going to go down is when it's being manipulated. Um, let's look at this in Thinkorswim as well, just to see. This is getting down to some really good prices. AWRE. Look at this. Okay. It just bounced off of the lowest support. That goes all the way back to 2003. This is a 10-year support. Every time it has touched the 10-year support, you can still see my screen. every time it has touched the 10-year support, it has gone up at least right here. Let me just make this very clear. It's gone to here, it's gone here, it's gone here. So literally from $1.50 to $6.69. It's done that 3 times. Well, I'm sorry. Yep, it's done it 3 times. I lied. It's done it twice. It's done it here, and it's done it here. And now it's back down here. This is amazing. I love this. I'm gonna put this on my Robinhood watch list, and I'm likely gonna buy this next week. I'm excited. Um, I don't think there's any reason why the stock should be down here. Let's look a little bit more at momentum. And I do apologize, we are spending a lot of time on this stock, but I think this is great value. I think we potentially may have found a really good company. Okay. Again, we're just gonna look. Just gonna squish things a little bit. It's gonna look a little messy, and I again apologize for that, but try and make it as clear as possible for everybody. So let's just look at some key metrics really quick. All right, let's look at some key metrics really quick. So we can see right here, we had the momentum. It's kind of not showing, which is intentional. Let me bring it up. So we had this huge downtrend right here that eventually rode its way back up. Downtrend here that led us back to the top up here. We had a downtrend right here for about, it looks like December 2012 all the way to about March 2016, 3-year downtrend. And then we had another long downtrend here. So after this 3-year downtrend, it went up to our 660 target. And then it started another, is this 3 years? Let's see, it's June 2017 to about October 2019. So 2 years, 4 months. And then over here, look at this. Momentum turning. And let me look, I just want to look at the yearly. Because if we get a yearly momentum turn as well, okay, we're not. The momentum here appears to, well, kinda. If we bottom in this year, if we bottom down here, this will turn light red. And we are coming to an apex. Yes, okay, so let me show you what I'm talking about. I'm gonna remove some things to make it very clear. Okay, so the apex here. Let's just, I want to make this purple to just kind of differentiate. So it has left the resistance. Basically, this is this next run, apologies. This next run is basically going to create the next level of resistance up here. So we're going to have resistance at 297, 450, and about 669. If it can break through all of these, which, I mean, this Fibonacci fan, it's not a Fibonacci fan. I call it a Fibonacci fan. Let's just look at it really quick. It's almost a Fibonacci fan. These levels have gone and bottomed all the way. So this, in my opinion, is ready for a new cyclical run. The company, maybe they're not disruptive to a new industry or to legacy products, but at these prices with their offerings and the current cash they have and how much money they make in a year, I think these are great. This is a great acquisition target. It just hit the bottom of all time on the stock. A little bit more research needs to be done into the CEO and that director who's been buying. I'm going to leave that to you guys to do on your own unless you specifically want a whole video dedicated to Aware software. Let me know. Otherwise, do it on your own. I might be buying. We'll find out next week. Let's move on to the next stock. All right, so the next stock we are looking at is going to be ticker symbol FTEK. FTEK. This looks like FTEK Inc. Looks like it had a huge move on Friday, 13% move. Let's just kind of expand our thing here. I thought I saw something. Nope, okay. So looks like it is potentially starting a breakout move. Very nice. Let's just do some quick math here to see what's going on. They make 26 million, they lose 1.3, so 25.1 million a year basically. Huge quick ratio, a lot of cash or something, a lot of investments. Earnings per share this year 100%, next year 100%, which is this year presumably. Gross margins 45%, smooth. Institutions are still buying. Shares available are 23 million. So this is, if we're just looking at sales to shares flow, it's about a $1 stock. Trading at 168, a little bit of a premium there. Nothing really jumps out at me here except for the quick ratio. Let's go see how much cash they have. And what type of pollution products do they have? Okay, so just really, okay, so the CEO bought 23,000 shares worth. That's not very impressive, but the CEO does own 329,000 shares, which is kind of cool. It's a good amount. So revenue is increasing. Cost of revenue also increasing. Gross profits resulting in growth as well. Operating expenses are going up compared to last year. Net income's negative, which is not good. What's the big thing here? Nothing really out of the ordinary, honestly. Let's look at the balance sheet. They do have a high quick ratio. This have 35 million, up from 10 million. So current assets are 41, total liabilities 3.7. That is a 10x. Assets dwarf liabilities by 10x. This seems like a no-brainer of a stock to potentially be watching. It's a little expensive compared to sales. I mean, they have no debt. Employees just staying flat, basically. What's up with this company? So they provide boiler optimization, efficiency improvement, and air pollution reduction. Operates through two segments: air pollution control and fuel chem technology. The air pollution control tech offers technologies to reduce nitrous oxide emission in flue gas from boilers, incinerators, furnaces, and other stationary combustion sources by low and ultra-low nitrous oxide burners. Over fire air systems, nitrous oxide out, and HERT selective non-catalytic reduction systems. Okay, so they have a lot of offerings for air pollution, air cleanliness. Let's look at the cash flow. Cash flow is king. Negatives. So, I mean, this company is on the right path to turning things around. Do I feel like we missed the move? A little bit. Stock's up over 100% in the last year from the low. Let's take a little peek at the website. Is this disruptive? Kind of. It depends on their air pollution products. Um, I mean, their website just looks like there's little effort that was put in, but for engineering companies, it's kind of common, unfortunately. Let's see if they're doing a lot of hiring. They make 26 million a year. Okay. Do they have the right processes and procedures to scale? Let's look at Thinkorswim in a minute. Okay, so their hiring page looks to be the most up-to-date piece of software that they have on their site. Benefits, they have normal, nothing out of the ordinary. Again, products, just so many products. Air pollution control is a big one. I mean, this is one huge monstrous chart that looks ready for a turnaround. Okay, so they have engineers, accounting. My head's in the way, sorry. Nothing that stands out like yeah, current opening 66. Like sales, I want to see sales. I want to see them grow. I want to see them expand and scale. A lot of hiring for Illinois, Michigan, Illinois. They're a small shop. I'm gonna open Thinkorswim. Let's take a look at FTEK. This is an old chart I've done. Pretty accurate. Um, you know, so just kind of speaking this into existence, but we have starting point, middle point, ending point, which is also the starting point. So let's just be fun. Let's have some fun here. So start to finish, or start of the cycle to the restart of the cycle. Boom. And then so this is first spike, largest spike, largest spike. So it looks like the largest spike, if we're just going off of simple patterns, looks like potentially 2034. I want to look at the momentum. Let's check this out. Okay. Momentum looks pretty standard on the monthly chart. This was a huge, so from the all-time high and then whoosh. So momentum seems to be typical right here. Nothing too crazy. It hasn't been going down for years and years and years. It looks just like a shallow-ish momentum move, which is okay. It just doesn't really provide us much context in terms of what to expect. So the yearly, this is where I get excited, is if we have the yearly momentum turning around. Ooh, look at this. Last time the yearly momentum turned around, huge reversal. This was 1, 2, 3, 4, 5, 6, 7, 8, 9, whatever. Let's do it up here. From 1993 to the high being 2007, that is a 14-year turnaround. And over here, the low, okay, so 2012, and now give it a year or two. This looks good. I like this. I'm just hesitant because this can be driven down pretty easily by manipulation or shorts. We're already at the end of year tax selling, so I think that extra pressure is gone for 2022. I mean, they have no debt. If they want to grow substantially, they're going to have to make investments elsewhere. So they're going to have to use some of that cash, which I would not be opposed to. They need to use it in the correct way. So I like this. It's a hot company right now. Um, the momentum on the yearly is in their favor. Um, do I think 168 is fair? If I do end up wanting to hold this and it goes down to 36 cents, I mean, did they do a reverse split or anything? Doesn't look like it. Um, no reverse split. It went down to as low as 30. It went as low as 30 cents and it reversed, which is insane. And it had a 391 million share traded month. Holy cow, when was that? Oh, it must have been a pump or something. So the low was 70 cents and the high in 1 month was $7. That's 1000% in 1 month. Holy moly. Um, let's just look at hedge fund ownership really quick. And we're going to look at FTEK. Let's look at the chart of holding. So it's 6.9 million in hedge funds holding. And if we look here on this right chart right here, it's pretty, nothing too crazy. Renaissance Technologies has a huge position. No, but they sold half off, basically. I take that back. They do not have a huge position. SX Investment Management's been buying a lot everywhere. I mean, this company, it's kind of overpriced, but with the cash that they have on hand, which is, let me just recalculate. The cash they have on hand is 35 million. That's double. No, that's more than they make in a year. So, gosh, I mean, I like this company. Shares float to sales is almost 1. Um, do I feel like it's a little overpriced? I do. I'm torn on it. Just because I know they're going to need to expand. They're going to have to do an offering of some sort. I mean, they have cash reserves to expand, but I'm just hesitant. And if I do hold this one for multi years, the momentum is turning on the yearly, so I would feel okay. I would feel okay holding the bag for a year. Let's just look at the daily and see where we could find a good entry here. Okay. So again, here it just kind of pumped. I mean, it's pumping still. So it's a little too hot at the moment, but there's going to be better times to add. So yeah, this one's nuts. So let's put this one on the back burner and we'll revisit this in a few months. And this is FTEK. This is worth investing in now if you're okay with holding as it goes up and down, up and down, up and down. The benefit is you will enter long-term capital gains. However, the cons could be maybe they dilute on some of these runs to pull some more money into the company to expand. So just a heads up. But I mean, given their sales and what's going on in the world in terms of air pollution, I think this company is poised to do well. I don't know if any of their technology is disrupting, or I'm sorry, their products. So this one is a back burner. I would like to get in. I would like to get in around Yeah, it's a little hot on the weekly too. It's too hot. I want to get in around. Let's extend to the right. Closer to $1. This will come down. So around a dollar to $1.20 is what I want to get in at. And I don't know if that's me being greedy and missing out or what. I mean, it kind of is. No, I think that's fair. I mean, we're in a pretty rough market right now. This is pumping. This is manipulation. Um, yeah, we'll wait on this one. But I mean, if it's it's totally valid to hold for a year or two, especially if you want to enter long-term cap gains and then get out next year on the next volatile move. So yeah, I like this one. We'll put it on the watch list. Yeah, we'll put it on the watch list. Okay, so the next stop. All right, the next company we're looking at is ticker symbol PXLW. Pixelworks. They are semiconductors and they've had a nice little run here. Look at this is a descending wedge and a breakout here. Typically it comes back down though to around $1.30. So let's see if we're interested in potentially looking at this one. So they make 69 million, but they lose 17 million. That puts them about well under no 50, around $52 million a year. They own $52 million or let me just do the math so I can coherently describe what I'm trying to say. So they make 69.8, but they lose 17.4, which is going to put them at 52.4 million in sales after paying off their income, which is likely debt or other costs of running their business. And if we divide the 52.4 million by the shares float, it should give us around $1. So just noting that there, but they also have quick ratio of 5, meaning they have some cash that I'm not really accounting for, but that I should be. Sales over the past 5 years have been positive. Institutions have been selling, insiders have been selling. Let's see what this company does. So it looks like they do semiconductors and software solutions for mobile, home entertainment, content, business, education, kind of all over the place. Okay, so the company sells its through a direct sales force, distributed manufacturers, representatives Japan, China, Taiwan, US, Europe, Korea. Pixelworks is based in Portland, Oregon. That's where I'm from. Very cool. Okay, so revenue is growing. 2020 was 40 million, 2021 55 million, and 2022 70 million. So it's going up about 15 million a year. They are paying for that to go up naturally. Operating expenses are going up though, which is not good. It's a write-off, but we want to see that go down. Net income's coming down. It's getting closer to break even, which is good, but a long way to go. A lot of selling, but let's look at the bigger picture. So the CFO, Aman, and Aman. So Aman has sold 3,000, 4,000, about 5,000, 6,000 shares, and he owns about 189,000 shares. So that's not a lot. If we're looking at the bigger picture, Todd DeBonis has sold a lot, 58,000 plus 24,000. So that's 82,000, a little bit over 100,000. Less than 10% of the shares that he owns, but doesn't really give us confidence in the company. So there's that. Um, let's look at the website. Um, Again, semiconductors for all these different types of products. Nothing too crazy here. Um, Very simplified website. Are they hiring for salespeople? I don't know. They don't even have a careers page. Let's just see here. I mean, PXLW, Pixelworks careers. Let's see if they have something offsite. Maybe they go through a contract company. Okay, institutions, hedge funds, etc. 22 million. Chart showing a little bit of a decline here. Let's look at the big owners. Vanguard sold about 20%. A lot of interest from ETFs and smaller companies, hedge funds, Fidelity, a lot of sells. A lot of people sold though right before the new year. A lot of tax loss harvesting. So that's kind of normal. They have a no guidance for next year, which is fine. Oh yeah, how much cash did they have? I don't remember if I noted that. Oops. 61 million cash. So they have the money to do things. Semiconductors, I mean, their stock should be around $1. They're not disrupting anything. Let's look at momentum PXLW. We're looking at the yearly chart. So it looks like the yearly is showing that it's cooling down. So the yearly is cooling down. Let's check the monthly. Need to grab my water. Monthly shows reversal. Yes. Okay, monthly shows a bottom reversal in process. It's $1.82 now. It needs to break this support. So it's definitely going to go for 252. It's going to try and touch its head on 252, and we'll see probably some resistance. A lot of money is going to be taken off the table at 252. But will it be overvalued at 252? Yeah. I'm sorry, how much? They had 57 million in cash? 61. Okay. No, they will not be. They will. They will be. Because this is $1. The stock's worth about $1 right now, based off sales to shares. And it just did a breakout here. Man, I mean, we're looking for disruptors, and I don't know if this one's really a disruptor. It's kind of. Let's get rid of the studies really quick and look at a cleaner chart. All right, here's a cleaner version. So yeah, I mean this. Whoops, let's do some quick charting really quick together. I just want a better picture of what's kind of going on here. All right, we have I can't really stretch it that way. I think it's going to be right around here. We could bring it to like right. Yeah, this is a good spot. Yeah, okay. So every time it's bounced off of the bottom of this support, right here, it's ran 36 cents up to $5, 1000% move. $1.50 to $7, not a 1000% move. And then here about $2.13 to about $7.88. Now it's deepening, kind of fell through. As people want to do extra tax loss harvesting for this year. Let's go all the way back. $51 a share is what it used to be. 51.75. We'll call this good. It's kind of sloppy. About there. There we go. Okay, so it's going to test here, and then it's going to try and break this. And it's going to run into this long-term resistance here. So the stock has priced in. So what we can see here, the stock has priced this in already. So as you can see, this is an expected move. And we do have resistance a lot pretty built up, like right here. Yep, look at this, you guys. Let's make this differentiated from... Okay, so we know this. I chose this channel because, let me just... You have a good vision right there. So here we have resistance, resistance, and now it's acting as support, support, resistance, broke through, acting as support. Now this is support, resistance, 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 support, resistance, 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 support, 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 resistance, resistance, support, support, breaks through, resistance, resistance. So we are coming to a big apex right here. And I want to own this. I'm sorry. If you wanted to own this now, you would want to get it for long-term capital gains. Because this time next year is going to be over here. And it could be down to $1, which is fairly priced at what it's at. And let's just bring this, look at this channel. This is what I love about technical analysis. So I've brought this channel to the left. Let's see how it lines up with other candles. Looky here, resistance, support, resistance, 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 support, resistance, resistance, support, support, resistance, resistance, support, resist, support, support, resistance, resist. This move has been in the making for a long time. So I like this. I don't think the company is revolutionary, but I think it's going to be coming to a... It's going to break the cycle, essentially. Look how back, goes all the way back to the very beginning. Look at this. Let me zoom in. Support, 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 resistance, supports. This is crazy. All right, I like this. It's coming to a boom or bust. I want to own this now because next year at this time, there's a good chance we will be at $3 or we will be trying to finagle 250 mark. And we'll be at long-term capital gains. And I think we'll be in a good place to sell. We've fallen out of this channel, which I'm going to make a little bold. So This is the long-term positive channel. This is the how many years is this? This is the year 2000. This is a 23-year channel. The stock is still respecting a 23-year channel. This is amazing. This is what I love about stocks. So again, not a revolutionary company, but if they can get their poop in a group, this is going to be a good outcome. And so I'm going to add this to the watch list. I want to buy. I'm going to be chasing a little bit. I think I want to buy next week. I just want to buy a little bit. You know, we never want to go too full in because maybe they announce expansion or something that involves diluting shareholders, which isn't a bad thing normally. It could be used to improve the company. So I like this. It's on a long-term breakout. We want to see how it reacts to the 200-day moving average right here. So this is going on the watch list. I like this one. The thing that makes this unique is the pattern setup. So my top companies are AWRE and PXLW. Let's move on to the next one. All right, the next stock we have is RVP, ticker symbol RVP, which is Retractable Technologies Inc. Just want to look at the bigger picture here before we dive in. I do own some of this company. It's a long-term building position. I'll show you why. So let's just look at high-level data here. So they make 141 with income of 30 million. Quick ratio is 4.9. They have just a little debt. Earnings per share this year is 100%. Earnings per share the past 5 years has been 66%. Sales have been 44%. This goes to show that this company has been performing at a high caliber and I believe could be undervalued. And maybe the CEO also thinks that as well, if you're familiar with what's been going on with this company. Institutions own 19%, I believe. I need to just confirm how they are calculating this institutional ownership on Finviz. There are 14.9 million shares available. If we do some quick math, we do sales plus income, so 141.6 plus 30.1 divided by 14.96. We get $11. So this is undervalued in my opinion, but we do want to be cognizant of macroeconomics here and what the company does because it is very trend specific based off of the health crisis that we had a year ago too. Maybe it's going on still, depending on who you ask. But yeah, very niche products. They are revolutionizing what I believe is the needle. I think this company is in line with Enphase in terms of stock performance over the next 1 to 5 years. Again, this company is enhancing, improving, making the needle, a legacy product, more safer. What am I trying to say? Illnesses, there's going to be more variants. There's going to be a lot more focus from people like me or other people who are going to need or want more vaccines. Here you go. Perfect setup on the macro there. And some extra credit if you wanted to do is look at this company for a case study. Look at several other companies that had similar setups during health crisis. By doing that, you can kind of get a gauge on looking at the pattern in the stock action setup for those and also kind of run them side by side to see if kind of they're running and performing in lockstep and if they're kind of having the same pattern essentially. So if let's say Moderna or Pfizer, whatever type of vaccine distributor is entering a bullish setup like we saw in 2020, is there going to be a bearish setup for 2 years, 1 year? Are we expecting, can we see like a huge momentum shift? Are we getting volume spikes for future months? Just being cognizant and aware of future price action to kind of help us make the decision on if this company is worth investing in. So let's scroll down here really quick. Insider selling 88%. Let's just take a peek. Take a peek. So let's look at insider selling first. This will be easy. So it looks like these Leonard Braden Michael, he was accumulating for quite a bit of time, and then he sold off tons of his shares at the bottom. Embarrassing. That's a bummer for him, but now there's 3 million extra shares in the market. Let's look at net income. We can see it's kind of all over the place. 24 mil here in 2020, 56 million in 2021, 30 million in 2022. Revenue is, again, 2020 was 81, 2021 was 188 million, and 2022 141 million. So 2022 is much better than 2021 or 2020, sorry. Gross profit just staying positive, but again, it's showing up as all over the place based off of the revenues. Let's look at their cash and assets and debt and all that fun stuff. They have 29 million in cash. And again, these numbers are old, so do not hate me if you see that I'm reporting out on older data. I'm going off of FinViz, so just chill out. Total assets, 104 million in assets. That's amazing. I'm sorry. Total assets is 206 million. Total liabilities, 107 million. So assets dwarf liabilities, not quite by two. But as we can see, long-term debt looks like they have 1.8 million in long-term debt, but they also have 70 million in other liabilities. I would look into those. Companies that have these like liabilities or debt is because they are expanding. So do some research there. Again, I do want to position this company. I do plan to add more, but I'm also waiting for the price to come down a little bit. So let's see. I wanted to go back up here for a reason. I don't know why I'm back up here. Oh yeah, so the sales, we should see the sales decline. They didn't give any guidance here because it's hard to guide on what new variants are coming out and how vaccine predictions can go, but smart on their part, but we do anticipate that it's not going to be as much of a demand as it was in 2021. So I think we'll see less than 141 million in sales in 2023. But again, we could have a black swan event, and that would help them. I think the absolute bottom threshold that we could see sales go to and still have a healthy stock price would be basically around 30 to 60 million for the year. 30 to 60 million for the year, and if shares stay where they are and the company does not dilute shareholders to get some cash to expand, this company is looking really good. They are revolutionizing the needle. I don't want to say revolutionizing, but they are enhancing a legacy product. That's kind of the whole reason for looking at these companies. So again, this company is going up with AWRE and PXLW RVP. I do want to position. I want to show you guys RVP in Thinkorswim because I want to show you when I think the next cycle is coming for RVP, not RVT, RVP. Oh my gosh, RVP, yes. Okay, so RVP had its huge spike up to $21 and it has now come back down. I could see it getting back to around $1 based off of historical patterns. We can see there is long-term support from 2009 that has been well respected. I think we are building a bear flag on the monthly. I do think the current stock price is cheap, and I think holding for years to come could be advantageous. However, it is one of those situations where um, it's a buy at your own risk and how you feel about price movement and how much patience you have. So again, this is kind of my little chart here. What I foresee happening is a capitulation move where this goes down to possibly $1.16, maybe less, has huge accumulation, and then it starts its next move up. And I would expect the next move up to be over at least $11, but I do see this going to 30 in the long term. And let me see if I have a chart to show what I'm talking about. So this is kind of the chart. It's a super mess, but basically, these cycles here, these are Fibonacci arcs, I believe, represent spikes. So this is 2001, this is 2021. So every 20 years, this has huge spike. So right here, we could see the price getting to around $28, $30. Again, I have no idea if it ever will. This is all just based off of historical patterns. The company could go bunk. We never know. So just kind of waiting and seeing how this plays out. There are several other supports and resistances on this chart right here specifically. We do have, this is a secondary support line that goes all the way back to 2001 as well. That has been well respected over the past, whatever, last 13 years. So it acted as support, resistance, support, and now it's acting as support again. Will it hold here or will it fall? That's the $1 million question. I think what we could see here is an inverted head and shoulders. So we have left shoulder here, have the head here, and then we have the building of the right shoulder and a reversal. Just my opinion. We never know what's going to happen, but yeah, I think this one's at a decent price, but I do think we'll get to lower prices, which are going to be more buying opportunities. Also, if you've made it this far and you've enjoyed this content, please subscribe to my content and like the video for the YouTube algorithm. It definitely helps me out. Hope you guys are having a wonderful day. I'll talk to you soon. Bye.